Okay, great. Good afternoon, everyone. I just had lunch, so I'm quite relaxed. So this should be fun. Why don't we start off with some quick introductions so people can hear a little bit about who you are and where you come from? You want to kick us off?
Hey everyone, my name is Hyunsu Jung. I'm the CEO of Hyperion DeFi. We're the first publicly listed DeFi company building specifically on Hyperliquid. Prior to this, managed $1 billion at Dharma Capital, asset manager registered with the CFTC and the NFA. So been in the space for about a decade now.
And I am Nico Pasquariello. I'm the digital asset specialist at Cantor Fitzgerald. If you've been following crypto institutionally for the past 12 to 18 months, Cantor has really paved the way in terms of institutional adoption of crypto. So we're very proud to be bridging the gap between TradFi and DeFi.
Okay, so I'm just going to open it up with maybe the question that an investor would have. Why wouldn't I just buy Hype? Why would I buy your DAT?
Yeah, I think that applies to all digital assets, right? Especially with the bear market. And if you think things are going to turn around, you have, I guess, three choices: buy the base asset, buy the ETF, or buy a digital asset treasury. For most of these assets that exist, Bitcoin, Ethereum, Solana, and further down the list, you have the operational cost of running a public company, and often there's not that much you can do with the asset. For Hyperion DeFi, or HypeD specifically, not only do we provide exposure to Hype, we have 5 revenue-generating business lines, and in addition to that, we've built infrastructure and have exposure, we call them embedded call options, to all of the key protocols that are building on Hyperliquid. So that encompasses borrow lending via Hyperlend, risk infrastructure for volatility strategies, as well as liquid staking and private trading. So those are all things that it's very challenging for investors at the public, retail or institutional level to get exposure to directly. And so we provide comprehensive exposure.
Great. Now that makes a lot of sense. So it sounds like as an investor, I get exposure not only to the token, but the ecosystem behind the token. So kind of similar question for you, Nico. So I believe Cantor just stood up big financing and helped launch 21 Capital. From the Cantor seat, what does an institutional allocator actually want from a DAT that they can't get from an ETF or direct holdings? How do you view that?
Yeah, sure. I think as we went through the original selling point of why an institutional investor would want to buy a digital asset treasury, we thought through, if you're going to put capital to work, you have to look at it as investing in an actively managed strategy. So who is the right person to sit at the helm of the company to actively manage your funds? Because otherwise, as Hyunsu mentioned, you can just kind of buy Bitcoin, hold it in your Coinbase, hold it in your personal wallet, hold it in a hardware wallet, protected account, and there's really a minimal risk there, but you also don't have the opportunity to compound your Bitcoin per share, right? So if you have the same $100 allocated 5 years ago, the reason that you would have chosen to invest in Michael Saylor or in MicroStrategy is because he has been proven to be able to compound your Bitcoin per share at 30% CAGR annually, right? So that same $100, yes, you pay a slight premium to his net asset value. You pay a bit of a premium on his MNAV, many would call it, so of call it like 20% right now. But for that 20%, you're getting an annualized 30% growth in your actual Bitcoin per share of your equity, right? So as we think through the main reason as to why anybody, whether you're a retail or institutional investor, wants to own a digital asset treasury, that is the core reason. A truly actively managed strategy can outperform just holding the spot token.
Makes sense. And so I think one of the challenges that we may have is with the use of the word DAT, because is MicroStrategy a DAT? I guess in some ways it is. It's like the OG DAT, right? But very different financial philosophy to say what you're doing. So a question for you, what do you think will separate, and I don't mean to infer that either one is not credible, what do you think will separate credible DATs from DATs that won't survive in the future as we look forwards?
I don't think that we are through paying, I call it like paying for the sins of, companies raising hundreds of millions of dollars and blasting into digital assets at the top last summer. A lot of these companies that are down 50% plus on their assets, and they don't really have a way to unwind such a large position. So that's part of the reason why I see such sluggishness in crypto today. And with strategy, I look at it more as like a genius of financial engineering, right? Michael Saylor was able to create, 6 or 7 different primitives now that enable them to use the velocity of public market engine and financial engineering to accumulate in a massive amount of BTC. And BTC is now trading below his average. So you have this question of, well, this guy has like 6.1 months of runway left. He has an 11% fixed income instrument that he has to pay, and he doesn't have any way to actually generate revenue on BTC. So at the end of the day, for us, it comes down to what can you do to build innovative, repeatable products and services, specifically on-chain, that can accrete revenue irrespective of the performance of your base asset. So for us, that's why we've worked so hard over the past year to build DeFi primitives. So if you look at an application like Aave or Uniswap or Compound or Lido, right? These are the leading borrow lending, liquid staking, swap infrastructure on Ethereum. They still generate $1 million to $2 in revenue a day. And this is like infrastructure where they don't have to change that much, but it's very sticky. Our perspective was if you can rebuild these primitives, but better on a very nascent ecosystem that eventually becomes a major dominant ecosystem, like we see Hyperliquid becoming, then Hyperion DeFi is the first public company positioned to benefit from all of that growth. Because eventually, even if when you look at BTC or ETH or Solana, there's like a cap to how much of a premium it can generate and what it can be worth. Obviously, Hype is different because of the structural composition of its buybacks, and it is deflationary. But if you can also build scalable, infinitely scalable infrastructure that institutions and retail will come to use and they'll pay for, then you really create something that is unlike anything that exists in the world today.
Great. So on the Cantor side, where do you see us in this DAT, ecosystem? Are we just getting started? Are we, of course, as you mentioned, that the price of crypto overall doesn't help things, but the title of this is The Investment Case Ahead. Where do you see us in the DAT life cycle?
A little maybe cringe, but I still think we're so early in broad crypto terms. Kind of put DATs to the side still. I genuinely believe that there are a multitude of projects where we are still incredibly early to the space. And then I think as you look at each individual situation across the companies, you can say what inning are they in. I think that Hyunsu and what he's doing at Hyperion DeFi is still in inning number 1. Genuinely investing in generating revenue from the underlying Hyperliquid ecosystem. Also owning the Hype token, but also benefiting from kind of the growth of DeFi. I mean, it's literally in the name, Hyperion DeFi. There are a few other DATs that I think do a really good job of not just holding their token, but also investing in their underlying ecosystem across a few other tokens, right? So I think those guys and girls are probably in like first, second inning, whereas you have other managers, and as you look at them from kind of like that lens of an active manager of a fund, I think many of them are in their 8th or 9th inning. It's probably almost time for them to wind down because over the past, call it year of building their track record, they really haven't done all that much. And I'm not in the business of throwing anybody under the bus, but I think if you were to go look at what managers have actually done over the last year and what they've built and what they've invested in, I think you would see that, for example, Hyunsu and what they're doing in Hyperliquid is a shining example of what I think a DAT should be.
Yeah, maybe the problem is the word DAT, right? Because what you're doing sounds much more than a treasury company. It sounds more like if I want to have access to the investment, all the revenue potential of Hype, and without going out and staking or getting involved in DeFi markets, or I can just buy your equity, right? But it's more than just a treasury company.
I love that you said that. So our tagline is more than just Hype. Hype being the native token of the Hyperliquid blockchain. But if you think about blockchains themselves as like cities, I think people have used this analogy before. And You're emitting these tokens, and ideally you want people to come and you want build there and create value and remain in these cities, right? And so Ethereum has done a really good job over the past decade building something that's very sticky, and now you're seeing institutions start to come and say, well, we want to deploy money markets, and we know it's very secure and decentralized, and that's great. But Ethereum has not done a good job of returning value to its token holders, right? It's the same price that it was 6 years ago, and technically it's inflated, at 3% per year, so you actually have less ETH than you did 6 years ago. With Hyperliquid, in its first year and a half of operating, the total supply has already been reduced by 5%. So if you maintain that momentum, and you have this exchange that offers you the ability to trade anything, crypto, equities, commodities, FX, pre-IPO, you're going to continue to see volumes accelerate there. And so for Hyperion's perspective, for context, we were the first public company to also list our own HIP-3 exchange on Hyperliquid. And so people were trading gold, NVIDIA, Tesla, oil on our markets, and we were generating fees agnostic to the performance of Hype and agnostic to the performance of crypto. And so you can take that model, build the same infrastructure with something like HIP-4 for outcome markets, and you can also build things for borrow lending, yield vaults, like was discussed earlier today, privacy infrastructure, liquid staking tokens, and you bring trillions of institutional capital to the Hyper EVM, you now have the exposure to the growth of everything. And the important point to what Nico said is, these other digital asset treasuries are not able to do it because Ethereum and Solana, XRP, Avalanche, whatever, they're all last cycle protocols or primitives. So it's not like you're building something brand new. At Hyperliquid, you are. And that's why we believe it's so early to be here and to build with a lot of institutional focusing in mind.
So someone very involved in the Solana ecosystem, but also a moderator. I am going to bite my tongue. No, it's okay.
There absolutely are DATs in the Solana ecosystem that I think are doing a great job.
No, it's fine.
They're out there. But Hyunsu's job is to speak for Hype.
I love the hype. It's all good. Keep it coming. So switching to Cantor, your title says digital asset specialist. I'm curious what you see coming. What is the composition of DATs in your day-to-day now, and where do you see that going, and what are some of the other things that you have an eye on or involved with as in your role at Cantor?
For sure. I think in my specific seat, I have a very strong view of institutional uptake for digital asset-based services. So not just at Cantor, but more broadly on Wall Street. Like, what do banks and other large financial institutions, money managers, et cetera, where are they going in terms of onboarding these products and services into their within their four walls? And I think if you were to look at the token prices over the last, call it 6 months versus the amount of conversations that I've seen happening, the disconnect is probably the widest that I've ever seen. I've been investing in crypto since 2014. I've been in the ecosystem for quite a long time. And the spread now between kind of like the fear and greed vis-a-vis the really constructive conversations that are going on, I think I would very confidently say, is wider than I've ever seen before. And so for somebody that kind of has that view, it makes me incredibly bullish to put capital to work and continue to build these relationships right now, because I know that in the next 12 to 18 months, those will start to materialize, and then price action will do its thing.
So, but just more specifically, are there other financial product vehicles that Cantor is involved with apart from DATs, or and then what is the mix?
So we are Switzerland. We raise capital for everyone. Yep. Whether you're a digital asset treasury company, a Bitcoin miner, an infrastructure company, if you're looking to enter the public markets or raise some form of capital, we will be there to help you. We'll be there to partner with you. Many of the firms that we raise capital before, we partner with in some way, shape, or form. So we want to create really long-term, lasting relationships in the ecosystem. So if you're somebody that's building a business and you're looking to raise capital, please feel free to connect with me. Yeah, I mean, it's not just DATs. It's everything in digital assets.
Got it. So now closing up with some lightning round questions. I'll start off with one, both take it. What's the biggest risk to the DAT thesis that nobody in the room wants to talk about?
I think it's the fact that you will see capitulation eventually, right? If there is no out, you're already seeing the smaller digital asset treasuries just like sell out their positions and then pivot to AI, right? That's been a trend we've seen over the past several months. I think like it's just more structural. Like, will there be some point where things start to break and you will see mass liquidation, and that's what drives down, substantial price diminishing across digital assets? I think that's probably the biggest risk, is that so much capital has been deployed and now it's like becoming very stagnant, and investors and shareholders are like, you need to do something with this, and they don't really have a lot of outs.
I think just to build on that quickly, the interest for probably most of us in the room is to be short fiat, long crypto, whether your crypto of choice is Tau or Bitcoin or Hype or what have you. The core interest is that we understand fiat currencies are worthless and we want to be long something else. There have been innumerable amount of people that have blown themselves up trying to manage that tightrope, and you want to, if you're going to do it yourself, using your own source of funds, that's wonderful. You want to invest in a specific digital asset treasury and a manager who has been able to do it before and will be able to continue to do it in the future. And everybody likes to kind of dogpile on Michael Saylor, but he's been doing it for a long time. He's been managing his leverage and paying his obligations for quite a while, and he's been able to walk that tightrope of leverage and being short fiat and long crypto. So I think the biggest risk to DATs in general and the overall trade will be over-eager managers who lever themselves at the wrong time and are incapable of covering their short fiat obligations.
18 months from now or 2 years from now, are there more DATs on NASDAQ or less?
Less.
Less.
And it's probably, if I could put words in your mouth, for the reasons that you gave in the previous answer. So there'll be either less or consolidation or are there other hype DATs? Excuse my ignorance.
Yeah, there's a total of 5 or 6, and the other 4 don't really have any meaningful strategy. They hold hype on the balance sheet, which I think is just a good positioning to have. But a lot more extended response to your question is there's going to be a lot more consolidation. But what you will see, I would say, in the next 18 to 24 months is the ones that remain and find their footing, and then you get a bull market, which I think will return eventually to crypto. It's a function of liquidity. They will be some of the best investment opportunities that are available, right? Because if you look at BitMine, not only do they have exposure to Ethereum, their own validator system, Mr. Beast Industries, and also like technically WorldCoin and OpenAI exposure, or HypeD with all of the infrastructure being built on the Hyper EVM, right? These things are more than just the base asset, and so when you see acceleration, it should be compounded acceleration. The same way that you saw it reflexive, that is going to be a benefit once we get out of the conditions that we are in today.
So maybe less DATs, but more AUM across a fewer set of DATs?
I think that's right. I think you start to see kind of that consolidation cycle start to happen in the next 12 to 18 months. It's really difficult right now, just because some of the original agreements that were signed when these DATs were formed were very long-term asset management agreements, and to rip them up is quite difficult. But as the kind of pain trade continues, I think into the next, call it 12 months, we'll see more and more DATs want to either come together and merge or have some interest in acquiring or selling themselves.
Awesome. Gentlemen, thank you very much.
Thank you.
Thanks, everyone.